AI /CH N. Good evening, and welcome to tonight's financial market update. Today, global markets saw a notably strong, technology-driven rally in U.S. equities, though with significant structural divergence beneath the surface. Looking at the numbers, all three major U.S. indices closed higher. The Nasdaq Composite led the charge, surging by 1.3% to close at 26,690.62 points. The S&P 500 gained 0.62%, finishing at 7,757.64, and the Dow Jones Industrial Average also ticked up 0.28% to 54,036.93. A key indicator of market sentiment, the VIX index, continued its descent, falling to 14.90, signaling that market risk appetite remains elevated. The core of capital flow was clearly directed towards the AI computing hardware and semiconductor supply chain. We witnessed multiple company earnings reports surpassing market expectations, creating a strong sectoral resonance. For instance, SITIM, or SITM, saw its stock price climb by nearly 25% over 2 trading days, while MTSI posted an impressive 14.49% gain. These performances further solidified the continuity of the AI computing theme. Concurrently, the bond and foreign exchange markets provided supportive signals. The 10-year U.S. Treasury yield continued its downward trend, settling at 4.66%, which helps alleviate valuation pressures on growth-oriented tech stocks. The U.S. dollar index, or DXY, broke below the 100 mark, closing at 99.60, indicating a weakening dollar. Spot gold, on the other hand, staged a strong breakout, surging 1.55% to reach $4,401.30 per ounce. This combination of a weakening dollar, falling bond yields, and rising gold suggests that while funds are actively reallocating into tech stocks, there's also a concurrent move into safe haven assets. This isn't a simple risk-on environment, but rather a complex interplay of the reflation trade alongside the dominant AI industry trend. Asian markets also had a positive day. Chinese A-shares broadly closed higher, with the Shanghai Composite up 1.02%, and the Shenzhen Component and Chinext indices gaining 1.42% and 1.35% respectively. The Chinese yuan also strengthened, with USD/CNH falling to 6.7425, indicating improved risk appetite from foreign investors and a spillover effect from the previous day's strong U.S. tech performance. Reflecting on our earlier market outlook, today's performance exceeded our expectation for a volatile, range-bound market. The primary reason for this misjudgment was underestimating the powerful drive of strong earnings reports on specific sectors. The market's current pricing priority clearly places industry trends and earnings delivery ahead of broader macroeconomic uncertainties. Today, we observed a new structural signal. The semiconductor equipment and materials chain also saw broad strength, with several companies acting as catalysts through their earnings. This can be interpreted as the AI computing rally extending its reach deeper into the supply chain. From the perspective of the tri-linkage among currencies, equities, and bonds, we observed a concerted movement rather than divergence. The weakening dollar suggests capital flows into non-U.S. markets. Falling U.S. Treasury yields ease valuation pressures. And leading U.S. tech stocks, combined with a synchronized rally in A-shares, collectively point towards expectations of looser liquidity and a rebound in risk appetite. This bodes positively for Asian markets tomorrow, with A-shares and Hong Kong stocks likely to maintain their strong momentum. However, given A-shares' significant gains today, the risk-reward for short-term chasing has diminished, and investors should exercise caution. Looking ahead, we anticipate the AI computing hardware chain's rally to continue spreading, maintaining a strong directional bias. The US dollar index is expected to remain weak, and the VIX index is likely to stay below 15, indicating no immediate systemic risk triggers. Therefore, we advise investors to adopt a controlled long strategy, continuing to focus on the core AI computing tech theme. The synergy between US and